Hello and welcome to BQ Prime. A very good afternoon to all the viewers. I'm Hiral Datia. One sector that has been buzzing and in the news over the last couple of months is the sugar industry. And this is on the back of the projected fall in the gross sugar production. ISMA, in fact, has now come out and said that they're expecting the production to fall by around 9% at 337 lakh tons and asserted that in spite of this, the output is enough to meet the domestic demand. Now, exports are banned so far, and this is, I think, happening after a span of 7 years. There is no estimation coming in terms of a diversion of sugar for ethanol production goes, what the target is so far for the year. And globally as well, few of the world's top sugar traders are saying that probably it's beginning to look like one of the worst shortages in history from a global market perspective as well. To understand the impact from an industry perspective, joining us on the show is Mr. Atul Chaturvedi, Executive Chairman of Shree Renuka Sugars. Mr. Chaturvedi, good afternoon and welcome to the show, and always a pleasure to have you.
Thank you. Thank you for having me on your show.
Mr. Chaturvedi, it's always a pleasure. What's your read of the situation? ISMA is projecting a 9% fall. Though they are saying that the output is going to be enough with regards to where meeting the domestic demand goes. Firstly, your read of the situation.
ISMA is looking at a scenario of about something like 33.7 million tons of sucrose production. And if you divert in something like 3.5 to 4 million tons towards ethanol, so you would still have something like anything like 29.5 to 30 million tons of sugar getting produced, and with an opening stock of anywhere between 5 to 5.5 million tons, and Indian consumption being pegged at closer to about 28.5 million tons. I don't see any reason why India should have problems in terms of servicing or the consumption of this country. But we will have to see how things pan out during the summer months. At least for the next 5-6 months, when the crushing season is in full swing, I don't see any reason for any hiccups as far as sugar availability in the country or pricing is concerned. But on the international front, you definitely have a scenario where Brazil, in spite of having a fantastic crop of close to about anywhere between 625 to 630 million tons, they are facing massive challenges as far as logistical nightmare is concerned. In fact, Brazil this year has been blessed with a fantastic cane crop as well as a fantastic soya crop, and both vie for the same shipping space. And now I'm told that the weather is also playing front in Brazil, and they're having rains, which is affecting not only the crushing operations, but also the movement as far as shipping sugar out. In fact, I was reading somewhere that the waiting period for ships could be as high as 25 to 30 days today. So as against a shipment of about 3.5 million tons, which they normally do, the October month, the shipment is going to be closer to 2.5 million tons. So that is going to be definitely affecting the consuming countries, where the movement is a problem. And as far as India is concerned, India is in any case out of the world market. Thailand also is suffering from a much lower crop. So in fact, Thai crop is also likely to be lower. On the world scenario, we see a drop of about anywhere between 2.5 to 3 million tons. How that would impact the values going forward, we'll have to see, but it's likely that they will be relatively strong and continue to probably move northwards. Yep.
Right. So you're saying prices then will continue to move northwards globally, but will that have an impact on Indian prices as well?
India is a very, very regulated market. In fact, the government regulates the allocation for sugar to be sold in a month, and we are all governed by the Essential Commodities Act. So I don't think Indian values will be impacted too much, but definitely there will be a little bit of a rub-off and Indian values could be closer anywhere between 38 to 40 rupees. So I think the 31 rupees or 32 rupees kind of a scenario is now passing into history, I think. So the
Right.
new norm could be anywhere between 38 to 40 rupees a kilo.
Right. So 38 to 40 is still we're talking about ex factory prices, I would say, or wholesale prices. How much
Yeah.
is the translation into retail for a consumer?
Retail for a consumer could be anywhere between 44, 45 rupees or thereabouts. But you should see it in relative terms. If we look at the world values in rupee terms could be anywhere between 65 to 70 rupees a kilo. As against that, the Indian consumer, by the proactive actions of the government, is heavily cushioned, and the Indian consumer is still paying something like 25, 30 rupees lower than the world values per kilo. So I think Indian consumer is sitting pretty as far as even the festival months are concerned. So the market is not going to go through the roof for sure.
Right. So, with this kind of a cut that we are talking about from a production perspective, how are you seeing it happening internally for a Shree Renuka? From the usual trend, the quantum that you produce on an average, how much can you see that going down by?
Renuka production, definitely as far as Karnataka and Maharashtra is concerned, would be comparatively down compared to last year. But that is one of the reasons why we have actually gone ahead and invested in a unit in, or rather, we purchased a unit in UP, essentially to de-risk our business geographically. So, in overall terms, as far as Renuka is concerned, our production may not be affected all that much, in spite of a lower Maharashtra and Karnataka production, because it might get compensated to a certain extent from UP.
Got it. And with this, do you think there would be changes that the government could make with regards to where diversion to ethanol goes?
Difficult to hazard a guess because our Prime Minister is committed to uh, ethanol blending 20% by 2025. But having said that, when push comes to shove, and it's a trade-off between food and fuel, I'm sure food is going to win. And secondly, this is also an election year, and whether we like it or not, inflation is definitely a dirty word as far as elections are concerned, and as far as food inflation is concerned. So my take is, though it may or may not happen, we feel that the government should continue with the ethanol program and not reduce it too much. But we'll have to see because the announcement has still not come out.
Mm. And from a ethanol,
Still awaiting the announcement, even though the crushing season has started.
right? So, okay. So with this, currently, if you see for Sri Renuka, you have a capacity of around 1,250 KLPD, right? Do you think internally you will have to reduce it?
Not really. If you look at the sugar scenario,
Mm.
as far as Maharashtra and Karnataka is concerned, sugar is giving realization more or less equal to ethanol. So, as far as ethanol is concerned, it's always a case of either or what gives the better. And India is inexorably moving towards the Brazilian model, where the unit decides what makes more economic sense, whether to go in for ethanol or to go in for sugar. My take is that ethanol values, if the government is not coming up with the price increase, which I'm sure they would be in a short period of time, ethanol production should remain more or less intact. There's no reason. Because what is also true with ethanol is it reduces the interest burden because ethanol can be sold to the OMCs or dispatched to the OMCs as soon as it is produced. whereas that may not be the case as far as sugar is concerned. So I don't see too much of an impact happening as far as ethanol production at Renuka is concerned.
Okay. So overall, from a yearly perspective, how do you see the numbers panning out? Do you think there will be no major impact and the company will continue to remain in the black from a profitability perspective?
No, we were in the silent period, and I won't be talking on the financial numbers because the company secretary would be putting me
okay.
behind bars.
So maybe not. Let me not get onto the company specific thing, but from an industry perspective, we have seen the sugar sector, which has been, really on a strong footing since ethanol has come at play as well, right? And taking the current season into consideration, the challenges that we've already spoken about, do you think that the industry could probably face some bit of a negative impact this time around, which could hurt the profitability of the industry?
No, I don't think that's going to happen for the simple reason that sugar values, which were hanging around 34, 35 rupees a kilo or thereabouts, are now closer to about 39, 40, or anywhere between 38 to 40. So that should provide the requisite cushion. And ethanol price increase is also very much on the cards. How much is going to come is $1 million question that we'll have to see. But the realization from both ethanol and sugar is likely to be much higher. So I don't see that is going to impact the sugar sector too much. And whether we like it or not, now sugar is more energy sector than a pure play sugar sector or a food sector.
Absolutely. It's actually expanded and it's got detached from that negative connotation always that we had seen probably a decade ago when, I think if you saw a sugar company report a profit, it was a big surprise, and now it's turned the other way around. So yes, it's always been a vicious circle for the industry, and I think that continues for a lot of sectors. Thank you, Mr. Chaturvedi, so much for joining us on the show and sharing the views, because this is really helpful to understand what the industry is going through from a domestic market perspective as well as from the global market perspective. And the key from a consumption perspective is where the prices will go. Will the sugar be enough for the domestic market, which you've already answered for us. So thank you, stay safe, and speak to you soon again. And good luck for the coming quarters as well, and have a safe day. So that's with regards to Shree Renuka Sugar. Clearly, if you go to see indicating as to what it looks like, yes, there could be a glut, but the stock is enough for the domestic market. Brazil is an interesting story to work out for as well, because they are facing challenges not on the back of production, but it's the logistical challenges that are keeping the crop at bay, because the cane and the soya crop has been spectacular there. That's all that we have in this session. Thanks for watching, and lots more lined up on the other side. Please stay tuned to BQ Prime.